4 years after the onset of the global financial crisis and consequent economic downturn, there has been considerable debate on how to resuscitate economic growth, both globally and at the individual country level. The approach involves a policy choice between two alternative cases: a growth stimulus or consolidation. It is my view that the choice depends on the country's individual circumstances, its fiscal condition, the strength of its macroeconomic fundamentals, and any socio-economic challenges it may face. The policy choice for Namibia is clear. Although our fiscal position is not as robust as it was 4 years ago, it nonetheless remains relatively strong. We therefore have limited room to pursue moderate fiscal expansion to stimulate growth and expand service delivery in a targeted manner. Concurrently, however, we have to ensure that public spending is kept in check and public debt stabilizes within sustainable levels. Namibia is a relatively small open economy with a high trade to GDP ratio, given our export orientation and high import bill. Developments in the global and regional economy therefore have a significant impact on the domestic economy via trade, investment, and financial linkages, for which timely and targeted domestic policy response is warranted. In this context, Honorable Speaker, honorable members, allow me to give a snapshot of developments in the global and domestic economic environment under which this budget has been prepared. Developments in the global economy. 4 years after the start of the global financial crisis and consequent economic slowdown, economic recovery has now taken hold, and it is projected to strengthen gradually in 2013 and going forward. However, the risks to fledgling growth have neither disappeared nor subsided. The global economic recovery is thus projected to proceed slowly, improving from 3.2% in 2012 to 3.5% in 2013 and 4.1% in 2014. This projected gradual recovery is expected to be led by developing and emerging economies. However, improved economic recovery is largely premised on the efficacy, credibility, and timeliness of supportive policies in the Eurozone, the United States of America, and Japan, as well as policies to shore up domestic demand in China. This subdued global economic environment has negative implications for the Namibian economy through the external trade transmission channel, particularly in the export-driven sectors such as agriculture, fishing, mining, and tourism. Honorable Speaker, honorable members, following a significant fiscal expansion, our government took a conscious decision to commence with gradual fiscal consolidation. The MTEF that I lay before this August House retained the direction of fiscal consolidation, but it provides for measured and targeted fiscal expansion, ensuring that expenditure allocations are maintained in real terms and giving a boost to growth impacting infrastructure development and job creation.